Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back to yet another episode of the Young Investors Podcast.
Da-da-da.
It is a special episode today. Hamish, how you going, mate?
I'm doing well. People watching the video podcast will notice I've got my my editing monitor set up at the moment. I've got my monitor to the side because I'm deep in editing mode at the moment. You can always tell if I'm editing or scripting because when I'm scripting, I only have the one Mac like behind me directly, and if I'm in editing mode, I have it to the side and I have my MacBook. You can't see it on the camera, but they can see it behind there.
Right, okay. So, there you go. A little behind the scenes knowledge.
There you go.
Well, Hamish, it's good to hear your voice, but guess what? It's even better to hear our guest's voice because we have somehow, I've made some calls, I've gotten in touch. It took me a while. I had to scrub through the phone book, but I found him. Mr. Investing with Tom. Tom is back, everybody. How you going, mate? Long time no see. How are you?
Yeah, it has been a while. I think before we hit record here, I mentioned like 3 different times I'm really nervous for this because I haven't like done a podcast or anything in a little while. But it's
we got
good
it flustered, boys.
Yeah, I know. I should settle down. I have also had like 3 coffees. I was chatting to Hamish in the Google Doc randomly before the show about our caffeine intakes, so that could also be a factor. But it's good to be back.
You're feeling the jitters, but probably from the caffeine. What you been up to, mate? It's been so long. We put the feelers out. We said that we were going to do this podcast with you, and if anyone wanted to ask a question, or anything like that, just like type in, and everyone's just chiming in. How are you? Where have you been? Are you coming back? Like, what's been going on? Firstly, why did you stop making YouTube content? And also, just generally, what have you been up to?
Yeah, what have I been up to? Not editing, which has actually been quite nice. You guys can probably appreciate that. Why'd I stop? I was kind of looking at the channel just before, actually. The last video I uploaded was like almost 5 years to the day, maybe a couple weeks kind of either side, but almost 5 years to the day from starting the YouTube channel, and I've got like exactly 500 videos on the channel, so it looks like very nice. I feel like with my 500 uploads sitting there.
Nice.
But yeah, I kind of at the time it felt like quite a big decision to sort of stop uploading. I put up a community post about it, just saying I probably just didn't have the passion for like making videos that I had when I first started YouTube. It was starting to become a little bit more of a grind. As you guys were probably seeing too, like the growth of the channel had slowed down quite substantially at that point as well. And we've started a young family as well. So that was definitely a factor. There's just like less hours in the day to make videos on YouTube. So I've still been like kind of, I feel like in the investing world, like behind the scenes, like I'm still studying companies and all that good stuff. I just haven't been putting the content out. So but it's good to be back on podcasts like this. I just don't talk to people about investing as much. It's just more in my head again, which is kind of what it was like before I started the YouTube channel all those years ago. So here we are.
Do you have any desire to come back to the space in any capacity, even if it's not YouTube? But obviously you're doing this, but more podcasting or I don't know if you've been posting on Twitter. I haven't been on Twitter recently, but is your appetite for coming back to the space there?
At this stage, it's probably not, to be honest. I'm still kind of active on Twitter, but when I just look at like the grand scheme of the things I can spend my time doing, with like focusing on my day job, my career, which I do really enjoy and is going really well at the moment, spending time with the family or making YouTube videos, like YouTube these days is lower down the list than it was in the past. There was a while there where I felt like YouTube could become like a real fully fledged like business for me. It was a great like side hustle for a few years there. But I probably just didn't have the success with scaling it up as much as you guys have. Like Brandon, I think you must be pushing 1 million subscribers here pretty soon.
Yeah, getting close.
It's just insane, and that that's 20 times the size of my channel. So I probably didn't have the passion for the creative video, high quality video type stuff that the two of you do. I've definitely got the passion for the investing content. I feel like I got a good investment brain on my shoulders, but I don't know if I want to be running a media company as a full-time gig, So that's kind of where I'm at.
Fair enough. But you've still been looking into companies. You still love businesses and investing and all that sort of stuff.
Yeah, absolutely. Hopefully the passion for that never wanes. It certainly hasn't yet. So for sure, I've added a few new companies to the watch list. Haven't pulled the trigger on anything for a little while, I must say. But still nerding out and listening to conference calls and reading these filings and all that good stuff. So
yeah, it sounds like you're in a similar boat to myself and Hamish. We kind of always talk about how we feel like frauds at the moment because we keep looking into all these businesses, but we kind of just keep passing on a lot of stuff, and it's just not quite the best conditions, I guess, for the value investor out there. But it's good to hear that you're still in the zone and you still enjoy it. That's good.
Yeah, true. Well, I mean, we'll get into it in this episode, I think, but I guess we're not alone with not exactly loading the boat on shares. Granddaddy Warren is much in the same boat. So,
What a segue. You've just led me beautifully into that, Tom. So I appreciate that because yes, that is what we're going to be talking about today is the 13F filings. So they came out just the other day, which is, of course, the quarterly update to all the super investors' stock portfolios. So we get to the little peek behind the curtain. So it's a great episode to have Tom on for as well because between the three of us, I think we follow a lot of the world's best value investors, so it'd be good to kind of get Tom's view on the 13Fs as well. So we'll talk about everybody: Warren Buffett, Monish Pabrai, Guy Spear, Lee Lu, Michael Burry, Seth Klarman, Bill Ackman as well. There's lots to talk about. So Hamish, do you want to run us through the sponsor and then we can get cracking into the podcast?
I didn't know we were doing sponsor segment. I don't have the script. Hang on.
We're drawing so many views from this episode just through. We are monetizing Tom's presence.
You should know this. Now anyway.
Yeah, I know.
We're doing double the amount of ads in this episode. Hamish. We're doing double ads.
Do you want me to read it twice? We can read it twice back to back. You ready?
I haven't negotiated a cut of this ad revenue, by the way. What's going on?
We'll talk about that later.
We'll talk about that later.
With that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings. And manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
All right. Let's get stuck into some 13F filings then, lads. And let's start with the biggest and the best, Mr. Warren Buffett. And we've kind of already spoken about Warren Buffett's 13F because we got the news early. But of course, the biggest news was that he did reduce in his Apple position. He sold 49.33% of his Apple shares, so he did cut it in half. And the crazy thing is that one move caused a 29% change to his overall portfolio. So the stock now sits at 30%, or was it 50%? It's now at 30% of the Berkshire portfolio value of $84 billion. And I was just looking what the next largest stock is. The next largest stock is Bank of America at $41 billion, occupying 15% of the portfolio. So I think myself and Hamish have spoken about this probably the last couple of weeks, specifically talking about the reduction in Apple. So I was wondering, Tom, do you have any kind of take on why Warren might be literally cutting his biggest investment in half?
Yeah, I do have some thoughts, but like, what a freaking run Apple was for Buffett. It's insane.
Yeah.
Like, I think that doesn't feel like that long ago, but it must be 8 years since he started buying Apple, I think, at this point.
Yep.
2016.
Yeah, he just absolutely crushed it. Like, he put a lot of money into Apple, but it wasn't 50% of the stock portfolio because he put 50% of his portfolio in it. It just went up a lot. Yeah, he's crushed it. I mean, like, if you just compare Apple now to when he first made the investment, Apple was a really cheap company, just kind of quantitatively. Like, I think it got down to about 10 times earnings, maybe like 8 times earnings if you backed out the pile of cash they had at the time. And they were being pretty clear that they were going to allocate a huge amount of it to share repurchases and just shrink the share count. You know, the business and absolute like net income terms would keep growing, but the earnings per share would grow even more so. That's exactly what we saw. The PE multiple expanded as well. So he had just like all these little engines of value creation like working in harmony. It was kind of a beautiful thing to watch play out. And I think it's pretty much played out. Like, they don't have the big piles of cash that they once did. They're still doing a huge amount of share repurchases, and like Apple just prints money like crazy. But compared to the firepower they had like back in 2016 to shrink the share count, it's just not there today. And the PE multiple is much higher. So, you know, every dollar going towards repurchases isn't quite as powerful as it once was. So, yeah, I don't know if Buffett's kind of learned his lesson from like Coca-Cola back in the 90s when that ran up a lot and he didn't sell. And since then, I was looking this morning, Coke's up like 60% in the last like 25 years, which is not great, really.
That's interesting.
So,
I didn't know that.
Yeah.
That's
So I don't know if he's learned his lesson from that. Interestingly, I don't know if you guys saw this, but if you look at the exact number of shares he now holds in Apple, it's exactly 400 million, and he also owns exactly 400 million Coca-Cola shares. I don't know if that's a coincidence.
Oh, right.
Or if that's, you know, those last 400 million. But imagine logging into your brokerage account first of all and seeing millions of shares, 400 million shares, but just as an insight. But I don't know if he's going to hang on to those last 400 million or what.
Yeah.
I'm not too surprised.
Must be his lucky number, 400 million.
Yeah, I wonder if that's like a little inside, like I'm done selling, like I'm finished. I'm going to hold on to my 400 million. It could be.
It could be, actually. Maybe it's just like, you know what, 400 million, we'll hold it, same as we did with Coke. But because he's also said that, make no mistake, unless something crazy happens, Apple's still going to be his biggest position when Greg takes over. Like, I think that was the quote out of the meeting.
Yep.
So, and, you know, when he was asked about whether he thinks the business of Apple has changed at all, I mean, whether he was telling fibs or not, he said, no, we still see it as a business and we still think it's going to be our number one holding. So, but yeah, it's certainly a lot of profit clearing. What do you give the percentage chance that he's done selling, Tom? You reckon he's done, or you reckon he might have further to go? Hamish, to your point, it does seem like he's finished on 400. What was it? 400 million shares. Mm-hmm. It's a very round number.
It's a very round number.
I don't know.
It's quite a Guy Spear-esque thing to do. If you ever look at Guy's 13F, there's very round share counts through that portfolio.
Okay, right.
Yeah, I don't know. If it was some obscure number like 397 million, I'd be like, oh yeah, he's just going to probably keep selling it down over time. But that has made me stop and think a little bit. To like stop clean on the last day of that quarter when the 13Fs are filed at exactly 400 million shares is like, surely that's not a coincidence.
Yeah, that's what I was going to say. It would be the biggest coincidence ever. But yeah, very interesting. I think you are definitely right, Tom. That's been one of the biggest, definitely one of the biggest, well, probably in absolute terms, it's got to be the best investment he's ever made, surely.
Yeah, for sure.
It's a huge amount. I think, he sunk 30-odd billion into it in total. Is that right? And it was worth, whatever it was worth, 100, over 150 billion. All right, what else happened in the Buff Daddy portfolio? This is something that I don't know very much about, but I think you guys probably know more than I do. He reduced 3.5% in Chevron, added 3% in Occidental Petroleum. He seems to continue to want to buy Occidental Petroleum shares. Anything to add there, boys? I don't have too much to add. There seem to be quite minor moves.
Yeah. I don't know. I've nothing. I don't know if you have something, Tom, but oil is. I did a video kind of doing an overview, looking at some of these things. But the more that I read, the more I realized I need to spend another 10 years learning about oil to to understand this. So, I don't really have any idea what he's doing there.
Yeah, I've got some old videos at this point on the channel as well talking about it. I think Buffett likes capital allocation at all the major oil companies, but particularly Occidental. A lot of it's just going towards repurchases and dividends, a bit of debt repayment as well. It's kind of cheap versus the current cash flows, and he probably thinks demand for oil is not going anywhere as quickly as maybe some other people think. So I think that's the general theory.
Yep, makes sense. He also added 4% to Chubb, and that was all out of the top 10 holdings: Apple, Chevron, Occidental, Chubb. Also added 262% to Sirius XM Holdings after it has fallen 47% year to date even. And he also added 7% to Liberty Sirius XM Series C, 7% to Liberty Sirius XM Series A after they've both fallen 27% this year. I'm not super up to speed on this one. We thought that maybe it was a bit of an arbitrage play with the merger. That I don't believe has gone through yet. Now it just seems like both the shares of Liberty Sirius XM and also Sirius XM Holdings have just absolutely fallen off a cliff, and Buffett's just making an investment in them.
I think that's like the risk of these kinds of like risky merger arbitrage trades, right? Is you're still, while that's pending, exposed to the performance of the business or whatever happens to the business. And so I haven't looked too closely at what's happened with XM, Sirius XM as a business, to cause the stock prices to fall. But as far as I'm aware, the merger is still kind of up in the air. No one really knows if the two shares are gonna be merged together. But yeah, that's a fun, complicated capital or I guess like class structure, investing structure. If anyone wants to dive into that.
Yeah. Did you ever look into that, Tom, or not really?
No, not really. I think one of the main lessons I took from Buffett's Activision merger arbitrage from a couple of years ago is that if the deal falls apart, you want to be comfortable holding on to the business that you've bought at that price. I never looked too hard at Sirius XM because I just don't. I'm not that familiar with the company.
Don't follow it.
Yeah, to be honest. So never really looked that hard. Yep. But yeah, interesting.
Yeah, fair enough.
See how it plays out.
Well, Hamish, I wanted to ask you about this one because this is right up your alley. He is now completely sold out of his Paramount Global position after selling 88% in the last quarter. I think we spoke about it last quarter, but he's decided to, only very briefly, I think, but he has decided to let that one go through to the keeper. He's out. He doesn't want anything to do with it anymore. So do you have any kind of thoughts on that? This is kind of more up your alley, I think.
Yeah, it's kind of interesting because it's like everything he said publicly about the movie business was negative, and then he still invested in a movie in a production company. So it was always kind of a strange one to see that he did that. And then I think he specifically said it was him, right? That it wasn't like Ted and Todd that did it. I think it was actually him that made the investment. But yeah, it was interesting because I think like back in 2022 was really when in the kind of the media space, everyone seemed to be making investments in different businesses. Like 2022 was when I think Bill Ackman started or tried to invest in Netflix, and then he got out of it. And then there's some investors who were in Warner Brothers because that entity was created. And then there was Paramount. So it's like everyone kind of placed different bets in the media space around 2022. And it's been really tough for the legacy media businesses kind of since then. And Paramount's earnings actually came out last week. I just had a quick look at it. I haven't kind of looked too deeply at it. But the stock's actually down 60% since Berkshire invested in them. And they kind of added a little bit more over time, so I'm not exactly sure how much they ultimately kind of would have lost on it. But in terms of earnings, it's not been great, and it's kind of the same story that it's been for a number of quarters, which is the streaming business is growing. They grew their streaming revenue by 13%, but then their legacy cable business, their TV business, is declining, and it's because that business is most of their revenue. It's pulling the entire company down. So their TV business was negative 17% year over year for the quarter. And overall revenue actually fell 11%. So even though they have this, fast-growing streaming business, for many quarters, Paramount has been the platform that's added the most subscribers every single quarter. So they have a pretty successful streaming business in terms of revenue growth. But overall, they're just weighed down by this accelerating number of people who are canceling their cable subscriptions. And actually, on that specifically, they had to write down a $6 billion write down just in that quarter of their cable business goodwill, which obviously is not, it's just a asset write down, but it does kind of reflect what is happening, which is that they had
reflects the trend.
Yeah, they have had these valuable assets that are worth a lot less. And that asset write down to me was crazy because it was $6 billion, and I think they generated $7 billion of revenue in the quarter. So the write down in the value of their cable business was almost as much as all of the revenue they produced that quarter.
Aye. Just do it in one fell swoop.
Yeah.
Just yeah, exactly. Yeah, interesting. Yeah, there you go. I don't think I would. I don't know. Paramount is not a company in my circle of competence. Tom, do you look into these kind of companies or not quite? What's even in your circle of competence these days? That's an interesting question. What companies do you like to look into? Not much.
No. I guess if I look at what's in my portfolio at the moment, well, without giving away individual stocks, maybe I shouldn't have said that.
That's all right. Just what sort of businesses are you interested in? What areas of business do you?
Yeah, sure.
Do you kind of keep up with?
I'm pretty comfortable with a lot of consumer-facing companies that the average person would recognize. I don't think it's hard to get your head around an Apple or a Meta or a Google or that type of stuff, just because we use the products.
Yep.
Outside of those more obvious ones, my background is in agriculture. I've got a degree in agricultural science, so ag and food related stuff is pretty. I'm pretty good with. Although there are some lower quality businesses in that, because you get into the commodity world a little bit with a lot of that stuff.
Right.
And then I've actually recently, or in the past couple of years, probably at this point, spent quite a bit of time getting my head around banking. So I'm getting more and more comfortable with financials for sure.
Oh, nice. Yeah, very interesting. And you also just dropped in the doc here that you were looking at some of the Warren Buffett's moves as well outside of the US. Was that you, Tom? I'm pretty sure that was
me. Yeah. So Berkshire made a very successful investment in BYD, the Chinese EV business. I think that was originally an idea of Li Lu that went to Charlie Munger. Charlie obviously convinced Warren that Berkshire should buy it. I think, oddly enough, they bought it through Berkshire Hathaway Energy, through that subsidiary, which I'm not sure what their percentage ownership of Berkshire Hathaway Energy is now, whether they're up to 100%. I don't think they are, but they didn't own the whole thing, at least for quite some time there. It was Greg Abel and some other partners involved too. So it's a random fun fact that it was kind of slotted in there rather than the main Berkshire account. But at one point they owned nearly 10% of BYD. It wasn't, again, an absolute home run. It was flat for a period of years and then kind of exploded through 2019, sort of today. And they've cut that stake pretty much in half. So they're under 5%. Okay. They've been pretty consistently selling it for probably a year or maybe even close to 2 years at this point.
Yeah, they would have made a lot of money off that though, because that did go absolutely gangbusters. Good call from Charlie Munger, I would say. Okay, well I think that pretty much wraps up Mr. Warren Buffett. I guess we can just start moving down the list through some other investors. We don't maybe have to spend as long on some of these others, but we've got next in line, we've written down Monish Pabrai. He added 179% to Alpha Metallurgical Resources, added 11% to Arch Resources, held steady in Warrior Met Coal, and reduced 53% on console energy. I like what you wrote down, Tom. He's just rotating in and out of all things coal, because yes, these are coal miners. Did you ever take the time to dive into Monish Pabrai's kind of thesis around his investments in coal? Because coal isn't, to be honest, it's not something that would ever take my fancy. I'd probably just let that one fly straight through the keeper. Do you have any kind of insights, Tom, or not really?
A little bit. I spent some time looking at coal. There's also a couple of Australian listed coal companies that have done pretty well over the past few years too. Although those are slightly different. I'm not a coal expert by any means, but my basic understanding is that there's generally like two baskets that these companies can potentially fall into. There's thermal coal, like used for heating, and that's the one where I think demand is forecast to basically just keep falling off a cliff over time as we go to more renewable options. But then there's metallurgical coal, which is where Monish seems to be spending a lot of his time. So metallurgical coal ends up in blast furnaces for the production of steel, and I think the demand is less likely to like rapidly fall off a cliff than the thermal coal side of it. So I think it's like almost what Buffett sees in the oil companies, but like absolutely on steroids. Like the valuations versus the oil companies are cheaper. The thesis again, I think, is like demand might hang around longer than the average person thinks. And all the cash is going towards buybacks. So if you look at like Alpha Metallurgical Resources, for example, if you were to chart out their share count over time, it's been reduced massively. And I think if you bought it at the lows in 2020, it's 100 bagger from memory. Monish certainly wasn't in it then. It's been a crazy run. So I think that's the general coal investment thesis.
Right. Okay. Yeah. Interesting.
Yeah,
I didn't
cheap
know
stock
that,
with lots of buybacks. It's kind of long story short.
Yeah.
Makes sense. It seems to be quite appealing to our value investors. Hamish, were you going to add to that?
All I was going to say is I think Monish did a presentation on his YouTube channel a while ago talking about those specific types of businesses. I think he called them Uber cannibals or something like that.
Yeah.
Talking about businesses that have like deleted 90% of their share count over time, really aggressive on share repurchases. So if anyone's interested, I think if you search Uber cannibals, Monish Pabrai on YouTube, you can find kind of his model for or his explanation for those kinds of businesses. And he wasn't the only one in coal in coal this quarter. His good friend, I presume they're friends, Guy Spear, started buying Alpha Metallurgical Resources and Arch Resources as well. So, I guess they've been talking. They've been, or at least Guy's been looking at Monish's homework.
I honestly have a feeling that that's exactly what has happened. Monish has been saying, this is very important, cloning is important, no one ever does it, and then Guy's been like, okay. Just gone out and copied the homework. But it is, I just noted down that these are the smallest positions in Guy's US portfolio at 0.85% and 0.47% respectively. So he's not making massive bets just yet on it, but yes, it certainly does seem like he's following his good mate Monish into the coal industry. Okay, who else can we look at? Lee Lu, there was no change to his US portfolio except starting to buy some Oxy as well. So maybe there's a lot of sharing of homework amongst these guys. But that's like what these 13Fs are all about. They give you an insight and give you an ideas list that you can then take yourself. So it's probably less of a sharing of homework, more of just an idea sharing platform, the old 13F.
Yeah, I find it funny looking at Lee Lu's portfolio, at least the US portfolio, which is, I think, a very small part of the overall assets under management. So that's probably important to say. But you look at like the US holdings, and it's basically just Berkshire. Like his biggest stock in the US portfolio is Bank of America, which is Berkshire Hathaway's second biggest. He does hold Google, which is, that's his own, but then he all holds Berkshire Hathaway. And then he also holds Apple, which is Berkshire's biggest investment. And now he's just been buying, as you said, Occidental, which is Berkshire's sixth biggest holding. And then he holds a bank company in there as well. So I just thought that's funny. You look at his portfolio, it's like, yeah, he's invested in Berkshire and then also a couple of Berkshire's picks as well.
Yeah. Do you follow Li Lu as well, don't you, Tom?
Yeah, definitely. There's not a whole lot of like Li Lu content out there, but I love his like back in the day Columbia lectures where he's just like grilling the students on like basically like, why don't you know this? And he's like saying to the professor, like, what are you teaching these guys? You know, that's pretty funny. But yeah, just to emphasize Hamish's point on the US portfolio being kind of small in the grand scheme of things for Li Lu. According to Wow Wisdom at the moment, Li Lu's total portfolio is worth about $14.9 billion. The US is 2.5 billion. So massive majority is non-US. I think predominantly China.
Yeah. And I think that's probably a good point to bring up just generally when we talk about, you know, looking at the US market and not finding that many opportunities. It is important to explicitly note that the 13F filings are just US regulatory filings. So they only ever tell us about what's going on in the US part of their portfolios. But what we find with a lot of these super investors is while they definitely hold shares in the US, a lot of their investing is done outside of the US, at least at the current time. We can talk about Monish and looking at India or Turkey or something like that. You know, one of Buffett's biggest investments of recent years has been in Japan, not actually in the US. And there's a lot of those. There's a lot of those examples with these. You know, with Li Lu, most of his assets, his investments being elsewhere. So it's always worth just remembering that. It's always exciting to look through the 13S, but it's worth remembering that a lot of these guys are not particularly investing a great deal in the US at the moment. It's just that we don't see it. But yeah, as you said, Tom and Hamish, ticker.com is a good place where, you know, maybe other countries don't give you as nice, rounded, up-to-date kind of documents as a 13F filing, but you still get some good insight, I think, into some of the international positions in these super investors' portfolios. But with that said, should we move on into Michael Burry? Oh, golly gee, what's he up to? One of probably the main takeaway in this 13F for Michael Burry is that he has continued to double down on this kind of Chinese tech bet. So he added 24% to Alibaba, which is his number one holding, but only we're talking much smaller scale with Michael Burry, and it's worth mentioning that Michael Burry himself has a lot of cash on the sidelines, or a lot of cash, a lot of other stuff that maybe is not included in a 13F. But with that said, still his number one position is in Alibaba, which he did add 24% to. It's $11.2 million in value. He also added 87.5% to Baidu, which is now his number four holding at $6.5 million in value. But he did reduce 30% of JD.com, which is his fifth largest holding at $6.4 million. So yeah, an interesting, I guess there's kind of some conflicting messages, but I would say he's still kind of doubling down on this Chinese tech bet. And it's a weird one for Michael Burry because we know there's such a high turnover in the stocks in his portfolio generally, but these ones seem to be sticking around. So it makes me think, is he making more of, because we know that Michael Burry is a long-term investor at heart, a value investor at heart, even though he does do these kind of trading things. But this kind of makes me believe that maybe he is looking a bit longer term at the Chinese tech stocks and maybe just waiting until this broader macroeconomic environment in China kind of plays itself out. Tom, I know that you've, I don't know if you still hold, but have previously made investments in kind of Chinese tech as well, and I know you follow people like Monish Pabrai who talks about it all the time. Do you have any thoughts about what you're seeing out of these businesses in China, or the kind of the macroeconomics situation that we're seeing in China?
Yeah, unfortunately, it is true. I have invested in these companies. It's easily the worst investment I've ever made. Full disclaimer. But
do you still hold? I mean, so far, we never know. We'll come back in 30 years and we'll see.
Yeah. I still hold Alibaba. It's it's getting a smaller and smaller percentage of the portfolio as other stuff goes up and this goes down, and I add new money and all that good stuff. But I do still have a position in Alibaba. I think it's kind of similar to like, I mean, all of these investors we're talking about are basically trying to do the same thing. They're trying to buy businesses for less than they're worth. It just, everyone has slightly different styles. Like with Monish, it's the more volatile coal things. With Buffett, it's a mix of good businesses at reasonable price, or great businesses at reasonable prices, and good businesses, okay businesses with the oil stuff at cheap prices. I think same sort of thing for Michael Burry here. He just probably sees a cheap, okay business, probably likes the capital allocation, so he's added it to the portfolio. Yeah.
Yeah, fair enough.
Yeah.
Hamish, do you have any thoughts?
I haven't looked too closely at these businesses beyond just, seeing what Michael Burry is doing in the space. But yeah, it does seem along those lines. I mean, I was just looking there, like Baidu's trading at a price to free cash flow of 8, right? So you're buying these tech companies that before or during COVID and up until like the last couple of years were growing at 25, 30%, maybe even more per year. And now they've slowed down. So yeah, I think it really is just that. It's like it's a bet that you're able to buy this kind of cheap company, and it's cheap because there's a lot of the geopolitical risk, I think, between the US and China and the macro environment in China priced into the stock, into these stocks. And so yeah, it's just a bet that you can buy it cheap, and if they return to growth, then obviously they'll do probably really well. But I haven't, looked at the space too much myself.
Yeah, I mean, if you take
Jen.
Sorry, Brent. If you take something like Alibaba as an example, I haven't done the exact maths for a little bit, but I'm just looking at some rough numbers here. Like the market cap as we record is about $190 billion. I think they've got about 50 billion in net cash, which is, if you back that out, you get to about 140 billion. And the business has produced 25 billion in free cash flow before. So you're like sub 6 times free cash flow if you back out the cash. That's the type of stuff that is attracting a lot of people. The stuff that turns a lot of people off is the fact that you're buying an ADR in the Cayman Islands. It's kind of hard to figure out the competitive landscape of these e-commerce businesses in China without probably living there and experiencing it for yourself. There's also a bit of dilution and stock-based compensation and stuff you got to factor in with Alibaba and some of these other businesses too. So there's a lot of moving parts, but at a high level, it's like, I think it's easy to see what attracts people.
And it's also dependent on, I guess, the macroeconomic situation, which is very, very easily controlled by the Chinese government. I mean, you probably say the main reason that these tech stocks are down in China over the last couple of years is because the Chinese consumer has not been spending as much money, and they've been in a pretty bad spot. And obviously that gets controlled very closely by the Chinese government. So there's a lot going on that you need to consider for sure. But yes, what else did he do? He added 2 new stocks. Shift4 Payments is his number 2 position, and Molina Healthcare is his number 3 stock now. But again, these are still very small positions. I think Michael Burry's portfolio is, he manages like 250 million, and he's only got, his largest position is an $11.2 million stock. So, he's not investing a great deal at the moment. But Michael Burry as well is another example of an investor with not just US holdings, but also international holdings as well, right, Tom?
Correct. Yeah, I don't have the numbers in front of me. Sorry, but
that's okay.
His biggest holding is a international stock, which is British American Tobacco. Another one of these like sin sectors like coal and oil, tobacco, all this kind of stuff. Attracts some of these value guys because they just see cheap companies that make good cash flows and give it back to investors. So.
Yeah.
And that's a part of it as well. Like a lot of this value investing comes from digging in stuff that others don't really want to dig into. And, I think a lot of these investors, they know that by buying shares in a tobacco company, unless it's in an IPO or a capital raise, you're not like funding the company. It's just you're buying the shares off another investor. I guess you are profiting from their success in their industry, which may not be the best. But I guess the trend that we've seen over the past few years is that a lot of the big institutional investors are now guided by these rules around, social justice, ethical stuff, and it means that a lot of the big money is kind of kept away from some of these stocks, which can present opportunities for these value investors that can kind of jump in. So there's a lot to think about, but I think that's why you can see sometimes the value investors thinking about, no one was looking at funeral companies back in the day because nobody liked death, and there was heaps of great opportunities.
Yeah,
so,
could you imagine being some hotshot Wall Street guy going on CNBC trying to raise money, and you pitch funeral homes or coal or tobacco?
More people are dying every single year, and we're here to capitalize on that.
Yeah.
If that person dies, we make money.
Yeah, it doesn't get the same viewership and ratings as, I don't know, like a Tesla or Nvidia or something.
Nvidia.
Talk about AI. Why would you talk about funerals when you can talk about artificial intelligence?
Yeah.
All right, let's move on. We got Seth Klarman. The only thing I took out of Seth Klarman's 13F was actually quite a little bit of news, is that he reduced 64% in Google last quarter. So it went from his second largest position to his sixth largest. He's another Buffett-like investor. His book is called Margin of Safety, Seth Klarman, so it kind of tells you all you need to know. And unlike Buffett, he is currently selling Liberty Sirius XM as opposed to buying it. And I'm going to throw this one over to you, Tom, because you've added this one into the document. Bill Ackman. Bill Ackman is an investor that he's definitely chucked in with the value investors. Is not someone that I follow particularly closely, if I'm honest, but maybe that needs to change. But he's been pulling some big moves. Hey, Tom?
Yeah, for sure. He runs a really concentrated portfolio, probably leans a little higher quality, probably pays up a bit more for businesses definitely more than a Monish Pabrai or Michael Burry, probably even more so than a Buffett, is willing to pay up a little bit to get good quality companies. And he's got a few moves this quarter to talk about. Sometimes with an Ackman 13F, there's no change at all. So kind of interesting to see some of the stuff this quarter. So he's trimmed Chipotle 22%, which has been a big home run for Bill Ackman. He's done really well with that. He owns a couple of different share classes of Google or Alphabet. If you kind of do the maths on combining those, he's trimmed that about 16%, and made some small trims to some other things. So Hilton Worldwide Holdings, QSR, which is restaurant brands, I think like Burger King and Wendy's from memory. And one of the railroads, Canadian Pacific, that he owns as well. And he bought Nike. So not a huge position in the portfolio just yet, but that is a stock that's been getting absolutely smoked. They reported earnings, and the stock kind of tanked right at the back end of this quarter, which I think is just interesting with the 13F timing. So I wonder if it maybe is a bigger position, but he was still accumulating it right at the end of the quarter after those earnings when this 13F deadline kind of hit. Be interesting to see if that is a real big position next quarter for him, but that's a new one as well. And he's another one of these guys that has some international holdings, or just one of significance really, which is Universal Music. So that's I've written 5.3 million here, but I think I should have said $5.3 billion dollar position for him, versus his biggest US holding is 1.9 billion. So quite significantly larger than even his biggest US bet.
I was looking at just before the stock chart for Nike, and it peaked in 2022 at $177, and it's now $82.50.
Yeah.
So we've dropped 53%. And mind you, in the last even in the last week or so, in fact, since it's now the 16th of August we're recording on, and since the 5th of August, it's risen 15%. So you did, as you noted, Tom, you got that big drop after earnings that fell 20%-ish. But even since then, it started to really bounce back. So it might be an example of very good timing from Bill Ackman.
Yeah.
You ever looked into Nike or anything similar, Hamish?
I haven't looked into it from an analysis perspective, but I did kind of look back at kind of what happened, because it is always it's pretty rare to see an enormous long-standing brand like a Nike be down like 60% from like all-time highs. And it seems like they got quite swept up in kind of the e-commerce direct-to-consumer stuff during COVID, where they saw a lot of growth. And I believe they pivoted quite heavily towards direct-to-consumer and actually kind of fractured some of their long-standing relationships with some of the brick-and-mortar retailers like Foot Locker. And then what seems to have happened, or at least this is what I've read, is that when COVID ended and customers naturally kind of went back, well, I guess not naturally, but unexpected to Nike, customers actually went back to the physical retailers. And since then, they've kind of been trying to fix these brick and mortar relationships that they kind of fractured a little bit. And so their growth has gone from, I think, one quarter during COVID, I think it was either 2020 or 2021. One of the quarters, they grew revenue by like 80%. So they were really growing fast. And now they've had like no revenue growth in the last few quarters. And so, I think the stock is still kind of expensive. I think it's still like a 40 PE or a 30 price to earnings ratio, if I'm not mistaken. So even
I think a little bit less now.
Maybe
I think it's
less.
at 22, 23-ish.
Okay. But even still, before it dropped 60%, you're talking about a price to earnings ratio that's, in the 40s or 50s. So it was, I think, probably on the expensive side, and that's probably a part of this as well.
Yeah, interesting. Not one that I've ever looked into, but it makes sense. It's we'll see what happens to the stock in the next little while. All right, fellas, I think that's pretty much everything for the 13Fs. I think overall, I'll chuck it to you guys for your overall thoughts. Having had a look through all of the 13Fs, is there anything in particular that stands out to you, Tom? Anything? What does your brain tell you?
Yeah, Buffett just absolutely unloading Apple is the big standout kind of
it's got to be the biggest takeaway
kind of thing from this quarter for sure. But a lot of activity. Like sometimes the 13Fs are really boring, just no one does anything. But there's quite a bit of movement across, all of these people really. Even Guy Spear did something. He never does anything.
Yeah. True. He's woken up from his slumber.
Shout out to Guy. Yeah.
That's funny.
Hamish, your takeaway?
Yeah. My takeaway is we had no options bets from Burry, unfortunately. I forgot to mention this when we were talking about Burry, but that's one thing that Whale Wisdom captures that Data Roamer doesn't. So I had a quick peek, hoping to see some kind of ridiculous put option on the NASDAQ or something that would make a nice YouTube title. Unfortunately, we don't have that. So,
damn it. Yeah. It's always nice when he comes in with a very clickable headline, isn't it? Yeah. Always makes our jobs a little bit easier. But I thought it was a very interesting quarter. I agree with both of you. I definitely agree, Tom, that I think the Buffett stuff was the biggest. But yeah, there was a fair bit of chopping and changing, lots of activity, which is interesting to see. Keeps us mentally stimulated. All right. The last part of the podcast, I put out the feelers, Tom, to the audience because you've got some explaining to do, my friend. No, you did your explaining at the start of the podcast, but I put out the feelers and said, do you have any questions for Tom? So I have tallied up some of them, and I guess a few of them you've probably already answered through just the course of the podcast. For example, would you ever consider coming back to YouTube again? Actually, that's one. Maybe not at the moment, but do you think you would ever consider coming back to YouTube at all in the future, or it's just not on the roadmap?
Yeah, never say never. I don't think I will ever get back into the let's do 2 or 3 videos a week, try grow this thing into like a fully fledged business. I may do the odd upload from time to time just for fun, I think is what it might look like. Anything, yeah.
We spoke about this one as well. Tom, are you still following Alibaba so we can get rid of that one? Here's an interesting one. You mentioned that you are now Papa Tom, which is I'm happy for you, but at the same time it did mean that you missed the Berkshire Hathaway shareholder meeting. So
I was there in spirit.
You're there in spirit, but you weren't there in person, and that's my point. But this question is, Tom, have you set up an investment account for your children or your child at the moment? And if so, which stocks were purchased? That's an interesting question.
Yeah, sure. Yes is the answer. So our game plan is we're gonna basically put a little bit of money in every year on his birthday is kind of the game plan. And yeah, obviously nothing is investment advice here, but currently just what we're doing at the moment is a exact 50-50 split between an index fund and a stock that rhymes with Berkshire Hathaway. So we'll see what happens over time with which half performs better.
Yeah, that's good. Yeah, this is my favorite question on the list. Is that the richest guy in New Zealand? Can you confirm or deny? Are you the richest person in New Zealand?
I'm gonna have to leave people to speculate on that one.
Ooh, okay.
Yeah.
I'm interested. Who are the richies who are the rich Kiwis, Tom?
Oh,
do you know?
Peter Thiel, if you count him, because he was living in New Zealand for a while. There's a guy called Graham Hart who
that's the one that
had
comes
like
up.
a packaging business, I think. I don't actually know a lot about the guy, to be honest. Who else? There's the Mowbray family who have built a pretty big toy business.
Right.
I think it's Nick Mowbray, and I want to say his sister. Could be wrong on that. Pretty sure it's his sister, and she's like married Ali Williams, who used to be an All Black, and I'm pretty sure they've just bought a soccer team in Auckland. I'm pretty sure I'm not making this stuff up.
No, you're not. It's checking out. I've got the list of top 10 wealth creators in New Zealand, and Graham Hart is at the top. Nick Mowbray and family is number 4. Number 2 is the Todd family from the Todd Corporation, but that's a large private New Zealand company with a value of 4.3 billion. But I don't know what they do. It doesn't actually say there. And the Goodman family, apparently.
Yeah, I think there'll be a lot of real estate type people in there, just knowing the NZ and Australia real estate situation.
I want to ask you this one as well, Tom. Did you finally start option investing? This person said he told me a couple of years ago that he was learning. Is that something that you ever delved into in the end?
Yeah, I've still never had an options transaction actually, but well and truly open to it. Yeah, we got pretty close to selling out of a stock earlier in the year. The price dipped back down a little bit, so we didn't do this. But I was looking to sell a call option across those shares. So
right,
haven't done it yet, but it's a tool in the toolkit now.
Nice. And Hamish, you kind of looked into this as well. You wanted to do it with your Netflix position, but I don't think you didn't do it in the end, did you?
No, I didn't. No. Yeah, I think me and Tom, it was all around the same time. I think we were both kind of looking at some of the strategies.
Inspired by Matt Peterson.
Yeah, exactly. He gave us a bit of he told us all about it over lunch at that seafood place. And
yeah.
And so, same. It's kind of a tool in the toolkit, but no, I haven't ever used it. It's like, I'll leave it at that.
Yeah, there's actually been 2 situations where, like, if the stock, in one case for selling, if the stock had gone up another 15%, say, I probably would have pulled the trigger. And another situation where if the stock went down like another 15%, I would have pulled the trigger on the other side with selling a put. But in both cases, it didn't really happen. So didn't get it to do it, but yeah, I'm sure it'll happen.
Yeah.
Here's another one. How do you develop a story for or against an individual stock aside from looking at the finances? So before you delve into the financial statements, how do you go about developing a story or looking into the story of a stock, Tom? Do you have any good points there?
Interesting question. It probably depends on the company a little bit. Like I mentioned earlier in the podcast, I've been learning quite a bit about banks in the past couple of years. And that really is like purely just trying to figure out a financial puzzle. I think there's not a lot of like storytelling around brands and stuff to be done with banks. It's like, what's their deposit profile look like on the liability side? And what assets do they own in terms of like loans, or if they've got a stock portfolio or something in there as well. But there's some other stuff where you do need to develop a story and, look at the demographics of the customer and how it's going to change over time and all those things. But usually, like, I'm a pretty mathematical person. I'm not really attracted to a company unless there's something going on with the financials to kind of start with. And then you build the story from there around what could go right what could go wrong, like what needs to go right to get a good return, and how realistic is that. And if the investment's going to go really badly, like what would need to happen. That's kind of the way I approach it. Not sure if that directly answers the question, but those are some of the things I think.
Do you have rules like, I know some people, me for example, like I have to be interested in the business first before I kind of look at it more from an investment. Do you have any kind of rules that it has to fit with, I don't know, your values, or it has to fit with your interests, or has to sit firmly within kind of the industries that you already know about? How do you kind of view that sort of stuff?
Yeah, sure. If it's in new industries, I'm probably much slower to pull the trigger on stuff, just because I'm more aware that there's lots of stuff I probably don't realize that I don't know. If it's in an industry I understand, I'll pull the trigger on something a little quicker. I've never really been in the situation where I've had like some moral issue with buying a company. Coal might be the closest I've got on that, but I think I'd be happy enough owning a coal stock. I'm kind of in the Buffett camp of like, he would happily buy a cigarette company, but he would happily buy like a cigarette stock, but he might not buy a cigarette company to be a subsidiary of Berkshire. Like, I'm sort of like in that mindset. And at the time he said that, he's like, you can question like the logic of that a little bit, really, but that's kind of where I'm at.
With the current high valuations in the go-to US index funds like the S&P 500, are you looking more at international index funds and or a more balanced mid-cap weighted US funds like the S&P 500 equal weighted index? Have you ever looked at?
Are you still into?
Go ahead.
Yeah, are you still into ETFs and that kind of thing, Tom? Or are you more active now?
Vast majority of the portfolio is active. I've got index funds I bought in like 2017 when I first started or something, but that's it. To answer the question, well, it's not really relevant to me for the index stuff. For our kids' account I was just talking about earlier, the power of the index investor is not caring about the stuff, I think. So I chose to not care when we made that investment. If you're talking about like individual stocks, am I looking at like, smaller cap companies or things internationally or whatever? Not really. I just kind of look at each individual company on its merits. If it's in England, whatever, as long as I understand the accounting and the environment the business is in, whatever, then that's cool with me. If it's in the US and it's cheap, despite Nvidia trading at 1 million times earnings, it doesn't make much difference. So,
Yep, fair enough. This is a sad one to finish on. I don't know if I want to finish on a sad one, but because we haven't heard from you in a year or so, they said you never spoke about it. Thoughts on Charlie Munger's passing? Do you have any thoughts on the great Charlie Munger?
I've got lots of thoughts on Charlie. I think he impacted.
Need to condense them.
Yeah, I think he impacted all our lives to a reasonable extent, especially with what you guys do every day with investing content and stuff. A lot of the Mungerisms kind of flow through the videos and things. So, he lived a very long and very successful life, investing wise. And he probably, I think, has led like a life you'd want to emulate a lot more outside of the investing world than someone like Buffett probably has. Like Buffett has been just fully fledged playing the investment game with like a very, very high percentage of his time. Charlie like basically outsourced all his investing to Warren, and they bought boats and built houses and got involved with universities and had lots of kids and all that other stuff to do in life. So I really admire that about what Charlie did.
Very good. All right. Well, I think that is just about everything. We've been chatting for an hour, lads. It goes very, very quickly when you're having fun. Thanks, Tom, for coming on, first and foremost. It's great to have you back, man. Even though we might not see all that much of you, it's good to catch up every now and again. So thanks for coming on, man. Thanks for taking the time. Are you working today?
No, I appreciate the invite. I am working today. We're doing this right around lunchtime, so I'm going to have to get back on the tools soon and do some work. Do something a bit productive. But this is productive. This is great. This is good fun. I was saying before we hit record here again that I haven't spoken investing out loud to a lot of people in a long time. So I'm glad I hopefully maybe made some sense in this episode. Not too sure.
It's like riding a bike for you, Tom. It's like riding a bike. No, we appreciate you coming on. It's great to hear your voice. It's good to catch up as always. Thanks very much for hanging out with us, Tom. Thanks, Hamish, as well for joining me.
No worries.
And that will do us for today, guys. We'll see you all in the next episode.
See you guys.